My name is Willem Vriesendorp. I am the CEO of Teq Water. And Teq Water provides advanced water treatment solutions to help customers with increasing their water recovery and also with metal recovery.
Good to meet you, Willem. You're coming in from Holland. I just got back from Africa. And you're sitting in Australia, so there you go. It's a truly international show today. Hey, well, thanks for coming on. We obviously the demerger from Sunrise Energy Metals has happened, and you are your own entity. And we're going to talk today about what it is that you're trying to do. But before we kind of get into the company and what you're trying to do there, can you give us a little bit of background on yourself, please?
Yes. So as you just alluded to, I am Dutch. My study background is physics and have a master's in physics. And then after that, I joined for most of my time McKinsey, where I was focused on energy, also clean energy, but also the old energy. And then in 2010, I moved to China, where I joined a venture capital company focused on clean technologies. And then after that, I started my own water treatment company in China. And in that capacity, I met Teq at the time. That was called Teq. It's now called Sunrise Energy Metals. And then I jumped over, and that was now in 2016, to become general manager of the water business within Teq. And then we demerged past July from which was then called Sunrise Energy Metals and become our own entity, Teq Water.
Right. So what technology have you got? What is Teq Water? What problem are you trying to solve?
So we have a set of solutions for our customers, and we have three platform technologies that we build these solutions around. One of those platform technology, the most important one, is continuous ion exchange. So we have various ways to use resins to pull out certain pollutants or to pull out certain metals. A second part of our technology portfolio, a second important pillar of our technology portfolio, is our BIOCLENS. So we can dive into details later, but I'm just running through it now. BIOCLENS, that's an intensified bacteriological methodology. And the third pillar, and that's its own subsidiary, and that has recently gotten a lot of attention, is our graphene membrane business. And the subsidiary is called NematiQ. And that is, again, we can talk about it. That's moving into the membrane market, which is in itself a very large market in the water treatment market.
Okay, so your market cap was sort of 30 million at the moment, that sort of level. You've got a lot of cash, which is that, sorry, did you say yes or no?
Yeah, no, that's correct. It's gone down a bit in the recent turmoil, but yes.
Yeah. Affecting everyone. But you do have a good chunk of cash in there at the moment, so around 10 million bucks or so. Okay. So, you're in a good place to make some decisions about where you focus, but you can't be all things to all men. So all of the options that you just outlined for us there is, can you kind of prioritize what it is that you're going to be focused on, and to what end?
Yes, of course. So at the highest level, what we're doing is we attack or we address some of the hardest problem in water treatment at the moment. So as you probably know, the water treatment sector is a huge sector, right? So it's estimated to become around 1 trillion a year. But obviously a lot of that is relatively standard biological treatment. A lot of that is almost literally cement being put into place, right? So we're obviously not attacking those areas. But water treatment, especially these days, it's growing and investments are growing very, very fast. And that is very linked to a number of very challenging issues. One of them is brines. So one of them is what you get when you treat water is you get secondary waste. So in almost any plant where there's water treatment, you have secondary waste. And it used to be that secondary waste can go back into the river or back into the ground, or you had, with mining, these huge tailings dams. You still have huge tailings dams or evaporation ponds. And that trend or that old method basically is being not acceptable anymore. It's often not acceptable anymore for the companies. So the big multinationals, they don't want to do it anymore. Regulators don't want to do it anymore. It's a huge risk. We have a number of these incidents with tailings dams, and it's a huge waste of water. So a lot of the water is being wasted in secondary waste. So if you want to look across our technologies, one thing we do with our technologies is address the problems that prevent companies or municipalities from taking more water out of that brine. or from making sure that secondary waste is eliminated or treated. And thirdly, taking that secondary waste and extracting valuable elements out of that. So that can be metals, but it can also be things like phosphate or nutrients.
Right. So let's go back to the point you made earlier with the entire market is 1 trillion, but you're going after a very specific part of that. So what's the size of the universe that you want to operate in? Who are the competitors and what sort of market share do you think you can capture?
So it's still a very large market we're going after. So it's billions of dollars. And it depends a bit how you count it, right? Because these scopes can vary quite a bit, but it's a couple of $10 billion globally. The market we're right now attacking with our current solutions. So that's a very sizable market for a company like us. And what we're doing now is entering those markets. So what you do in water treatment, or what you have to do in water treatment, and in almost any technology field really, is obviously you have to have your demonstrations there. You have to prove yourself. You have to prove yourself in a region, in a sector. And once you've proven yourself, you can start to grow and accelerate that growth.
You can start to pitch, and you can start to and sell, because you can say, well, at least we've proved the technology works. This is a question of, I guess it comes down to, well, what does it come down to? Because if in this particular example, what are the companies that you have to go and talk to? What do the contracts look like? How long do they last? What are the what's the revenue from that look like? What do the margins look like?
Yeah, very good question. So the customers, we prefer to deal directly with the end user. So that happens, say, 50% of the time. And then we work with partners and with engineering companies.
When you say end users, it can mean a lot of things to different people. So what sort of companies are you talking about?
Big companies. So it could be the big mining companies, BHP, Rio, in our mining sector, in the industrial sector, the big consumer goods customers, all the big brands you've heard of tend to have somewhere in their value chain water treatment. And they tend to get more and more concerned about it. Our project in the Middle East that we signed this year was for BP with the end user. So British Petroleum, they want to do a better job in recovering more water or using it more efficiently. So that's an example of an end user we did. Fosterville is another one that's in Australia, a big gold mine. These are the type of end users we're dealing with.
Right. And what's the contract look like? Because I'm interested in the money side of things, and I'm interested in how you make money, the cost of sale, what you're left with at the end of it. How do you repeat? How long do these contracts last?
Yeah, very good question again. So it's easiest to describe based on our development recently. So what we've done as a company is, as you alluded to, we've first done our demonstrations, signed our first few contracts, and then around 2-3 years ago, we built our small, but still a real commercial team to go after those contracts, to go after these customers. So that has resulted since January 2021 in 6 contracts. And the contract size right now varies between, say, 1.5 million and 5 million. 5 million is a contract we just got awarded in the Northern Territories.
Right.
So that's our starting point. And these contracts tend to, so we've been accelerating the implementation of these contracts. That's related to sort of our increasing maturity as a company, but they tend to last, say, 9 months. Sometimes you can do it faster. Sometimes it goes up a bit to 12 months. And that's delivered as a package. So we try to be very focused around our core technology, because that gives us higher margins and that gives us more possibility to then standardize and then accelerate sales. But sometimes these projects, you're required to provide sort of an end-to-end solution, and we do that as well. Sometimes in cooperation with a company like a civil contractor, or sometimes we do it alone, depending on the scope. And that's sort of the core right now of the sales. And then we have a trailing revenue of after service and consumables. And it's important to mention that I think the 3 core technology platforms that we're building our technologies on, all 3 have substantial repeatable business elements to it. So to run through those 3 again, one is we build a lot around resin exchange. So that's resins. So these are consumable. Then secondly, a BIOCLENS. Again, that's these BIOCLENSes. In this case, we're even happy to only sell the consumables. Once we have our demonstration cases and our large-scale plants operating, then we certainly would also want to work with partners to just sell the consumables. And thirdly, the membranes, so our graphene membrane business, that's the least mature. So we're still working on that one to build our first pilots. That initially would also be a little bit of a solutions business. So we would sell the integrated equipment, but over time we would certainly see most growth happening in just selling these membranes.
Right. And so, so let's focus on the resins and the BIOCLENS then. So you told us the size of the contracts. I mean, are they high margin? And and if so, if they're on average say nine months, let's say, now you're an approved supplier. Would your expectation be with these larger companies to move on to the next project with them? I.e., the cost of sale reduces because you're an approved supplier, but is the continuous cycle of projects, or does each project require you to prove yourself?
That depends a bit on the type of customer. So there's some very large customers. So if you take BP as an example, but also other potential customers, right? They have multiple sites. So many customers have like 4 sites or 5 sites, and sometimes even more. So that's one form of the repeat business. Then there is the repeat business in the consumables, as I just mentioned. And then there is a lot of acceleration for us in standardizing designs. So because this has been a scale up, right? So we scaled up these technologies to large scale size, very large scale size. And what the next logical step is then to standardize those packages. So instead of saying we build it and we optimize it for this specific plant, you say, okay, we now have 3 options for you. And that shrinks that design phase, which now sometimes takes 3 months, to 1 month, right? And it also shrinks the sourcing period to a much shorter time, because at some point you would then also start to build a bit of inventory to your standard vessels or indeed the resins, for example.
And so with the sales process, so I'm sort of fascinated by this part of your business, because like say, if you prove the technology works, then we don't need to talk about the technology each time, but in terms of the selling and approval. So for BHP, for instance, has multiple projects around the world, but it'll have also multiple different management teams who have their own, ability to operate how they see fit. Or do you sell in at headquarter level, at BP senior management level, and they will tell the different projects that yours is a technology which is approved, so therefore they can use it? Or on the ground, do each of these operating teams have discretion to use who they want?
I would say that's often a combination of the two. So what you tend to have is central units, and it depends very much on the company and a bit the sector. I would argue that mining is more dispersed, so there's more power with the project companies, where some of, say, the consumer goods companies, it's more centralized. There's much more power with the centralized units, and they would then give either a strong recommendation or even a decision. It also depends a bit on water quality. So again, mines tend to be on one extreme of the range in terms of how differentiated it is. Whereas if you go to more municipal or certain factories, it can be much more similar across sites. So it's hard to give one single answer to that.
Right, and with regards to pricing, for instance, you're solving a problem for them. It's a question of how much they value that problem and how much you value that problem. So how do you actually determine what price and therefore what margin you can get away with on each of these tenders or these bids or these conversations that you have?
So you still tend to operate in a competitive market. So we tend to compete against solutions that are different. We almost always bring something that's fairly differentiated, which means our margin sort of increases by the delta between what we can do economically for them versus the next supplier. So on margins for equipment, so integrated equipment, especially advanced integrated equipment, again, I cannot disclose sort of our margins, of course, but tends to operate at fairly good margins. So say 30-40% that you can earn on integrated equipment, right? And that's quite different from much more standardized wastewater treatment plants, which get more like a 20% margin. So we very much aim to keep those high margins there. And then the consumables that are part of our plants also tend to earn high margins.
So again, kind of going forward in terms of the kind of growth element, because every company needs to tell a growth story. Is like it's going to be determined on how many contracts you win, and I guess in a meaningful way, you want to win contracts because you kind of got this legacy, you kind of got this annuity stream of post the contract of selling the membranes and the hardware as it were. It's kind of like selling razors. They kind of give you the handle for free, but they charge you a lot for the razors, blades themselves. What is your business model? Is it like get in there and get integrated into an operation, or is it different from that? I'm intrigued.
So I would say for the first business I described, which is our solution business built around our resins, it's very much a combination. So in those cases, we do not say, okay, let's just first sell 10 years only razors and then only the razor blades for the next 30 years. That's not going to be like that. So there's always a bit of a combination there. We do obviously see the share of our repeatable business grow there. For the other two business, so that's our BIOCLENS and then our membranes, it can be much more geared towards we're really in the business of selling either the consumables, really the narrow consumables, say, which would be the lenses and the membranes, but it can also be the lenses or the lenses packaged in sort of a standard setup, and the graphene membranes in standard modules. But that's then almost the same as this repeat business, as you say, as the razor blades. And those businesses would then also grow very much through partners and agents or very big brands. Right, so the big water treatment brands, to give the membrane as an example, the big water treatment brands, say Suez and Veolia and Evoqua, etc., they often have their own suppliers for certain elements. And membranes is a great example. So it's just that this first step into the market, you as a product development company, you need to prove that technology to the market, right? It's very hard to wait for others or pay others to do it. You have to go into the market, show that it works. And then the follow-up growth path would very much be that if it works well and if it shows the benefits that we expect it to show, that some of those bigger companies come to you and say, listen, we want your product to be part of our product portfolio.
Right. And where do you see it? Come on, you're an ex-McKinsey consultant. How do you see this breaking down or this playing out over the next 2-3 years in terms of direct sales, high cost, and to that conversion, and maybe creating a more wholesale product or licensing product globally to kind of be take advantage of a kind of first mover advantage in whatever it is that you believe that you can do.
So I would say that will be a few years when this second part of the business becomes a more prominent part. The 6 contracts I just mentioned are all 6 in the first category. And we will have more of those, right? We're very much chasing them right now. That is the part where we have a sales team in place, where we have our demonstrations out there, where we have our materials. Everything is set up for that part. Whereas the second and the third part, it is just now starting. And I think that's logical. That's just where we are. But it's also a very natural development, because what you tend to do, there's always a trade-off, right? So being able to continuously sell a consumable that everybody wants naturally is linked in 9 out of 10 cases to a longer development trajectory, right? So we've spent the last 8 years developing these graphene membranes, taking it from the university, from Monash University, and developing it into a product. And we have, maybe you've looked at some of the announcements, we have recently achieved commercial scale production with that membrane. So we've produced 1,000 meters in the US. So we now show we can scale it up at cost. We've been doing the test, and now the next step is doing our pilots in the field. So there's been a long development trajectory that will then, over the next 1 or 2 years, become a product that we start selling. So it's a gradual change into that direction.
Okay, and so how much money has been spent to date on the R&D components across all products?
Across, that must be tens of millions of dollars.
Right.
Millions of dollars. Yeah, I wouldn't know the exact. We have a long history, but a lot of money for sure. Yeah.
Yeah. Okay. So if we look at how this thing again, I just want to stick with the kind of growth component and how you see that going, because obviously, as you say, it's been a difficult. You're kind of flatlining here at the moment. You've kind of got your 6 contracts awarded. Your product has been proved in market, and obviously companies are getting to test that. But where do you think the step change for your company comes from, as far as shareholders are concerned, right? Because what do you think is going to move the dial? People talk about catalyst moments, but it feels like it's going to be a kind of slow, steady growth for you guys if you can keep hitting these, getting these contracts awarded. So what do you think it's going to take? I mean,
I'm not sure why you say we're flatlining at the moment. I would say that's the exact opposite of flatlining what's happening at the moment.
Well, I'm looking at share in relation to share price, right?
All right, now share price is a fair point. So, but I think if you look at our business, which is ultimately obviously a big focus. So if you look at last full year, which was half of the time we were still part of Sunrise, but we obviously were operating already as a separate business. The last full years we had 2 million of revenues, which was more than the previous years, right? So that's when it started. And then this first half a year revenues was 6.7 million. So that is more than 3 times more than a full year. So I do think you see a very substantial transformation and change in the company at the moment in terms of our growth. And we look to continue that. So I think if you're looking for sort of the growth story and the realization of the growth, that's happening at the moment, I would say. And we're looking to continue that, of course.
It's a funny thing, right? With junior companies, certainly having, your origins are in the mining resources space more broadly, right? And there are no revenues, there are no profits, etc. It's all about, telling a story about what the future could look like for you guys. You actually focus on the business of, like a real business, of generating cash. I guess, for me, it would be a case of how do you describe to people the step changes in what you can deliver, that they should take notice of, which are meaningful, which maybe the revenue reaches a point where you become non-dilutory. The revenue reaches a stage where you maybe can do, dividends. I know it's a long way off, but do you know what I mean? It's like, what would you point to and say, these are the moments, these are the deliverables, these are the things which matter to our business and should matter to your shareholders and new shareholders looking in?
Yes, no, that's a very good question. So what matters a lot is the moment we're living. That's still what I would emphasize. So what matters a lot is the fact that we've made that transition from, right, a technology company with some demonstration plans, and then the question is always, first, do they work? So we've proven that they work very well, they operate. And then second, can you now keep selling that? So that's the second point. So then how is that growth going to continue is a very valid question. So if you double click almost on the development that you've seen, you really are looking at a set of solutions, or a suite of solutions we're having. First, mostly talking about this first pillar I've been discussing. So a suite of solutions we're having with which we enter different markets. So we've been quite good now in the Australia market. So we've most of our projects have been in that market. We've been delivered project in that market, and you see sort of the follow-up for that. We've only just entered the project with BP I just mentioned, the oil and gas and the Middle Eastern market. So that's with a partner, Nesser. That's a Nasdaq-listed oilfield services company that is very focused on developing their environmental side of the business. And with them, we're now building, you could almost say, our first demonstration sector for that, first demonstration plant for that sector and in that region. So that's in itself a trigger. A similar thing I would want to say about China. So in China, we are now with our first large scale, one of our solutions is BIONEX, taking out nitrate. It's a very large project in northern China, a completely new application that's very unique, has huge applications in the US as well. We're towards the end of that project at the moment, so we're hoping to have soon sort of the final commission of that project. That's in itself a trigger to then have further growth. So these are very important triggers for us, because the last project I just mentioned concretely, they're literally neighboring wastewater treatment plants who are saying, listen, we have the exact same problem. It's very challenging to bring, in this case, nitrate down to a level that the government is requiring. If it works, we are very interested to have a similar discussion and do the same thing. So these triggers are happening. And then maybe a final comment in that same logic is, I mentioned mining a few times. So the mining and metal sector is a sector where we're very strong. So you could say we've made our inroads, we have a good name there, we have the contact. But the other industrial sectors, in particular, for example, food, and in particular also the regions of North America and Europe, are areas where we want to do the same thing. So if you're looking at where's the growth going to come from, that's where the continued growth is going to come from. It's going to new sectors, new regions, and having these applications proven in those areas.
Right. So shareholders expect that you will be utilizing available capital to sales Because there's a lot you mentioned a lot of, different jurisdictions, a lot of different verticals within those jurisdictions. It's going to take time to, tell the stories, sell the story, get people testing your product in, whether it be in a competitive environment or not. So is that what the next couple of years looks like? Next 2-3 years looks like, look, let's just get out there. That's the best use of our money.
And that's a very important element of that. But to come back to the membranes I just mentioned, that's one of the products that specifically would also require additional money to do that scale up. So just to be clear there, but it's in the same general direction, you could say, because it's proving up technologies in markets and then growing it on the back of that. But it is a bit specific because membrane making is within the water sector probably the largest and most uniform single product sector you can have. So it's a bit different in that sense. So
let's talk about that then. So the membrane component, you said it's the least advanced of the three, the graphene membrane. So it needs a little bit more. Are you saying a little bit more R&D, or is it a little bit more in terms of its exposure to the market?
Yeah, so it's most advanced, you could say, in terms of product developed, but it's least far ahead of saying if tomorrow a customer calls us, which is actually happening, we tend to say we first want to do our pilots. So our big focus there right now is to do, say, 5-6 pilots and then prove to the world and to everybody to say, okay, this is now running for 3-4 months in the field with wastewater, and it's showing characteristics that our early testing have shown in terms of water treatment. So that's the next step for that one, which is just, it's where the rest of the business was 2 years ago, say.
Right.
So
Okay. And if you look at what's sort of happening, and again, I'll sort of refer to the resource space because I know you understand a little bit about, they've had to move from a sort of just-in-time strategy to a inventory-focused strategy because, supply chains and, access to materials has been difficult for them. For you with the graphene membrane business, do you think, obviously, for all of these trials and stuff, are you going to have to again expend capital to have product available, or do you or is the lead time for these sales, these piloting, long enough that you can, once you've got an agreement in place, you can then go and build out what you require?
That's how we would start, but ultimately, yes. Ultimately, we would need to build up some inventory. The key next sort of area would be we really need to build our own ability to produce that. So what we've been doing now is we control the full value chain, just to be very clear there. But we've now produced this first 1,000 meters based on a virtual factory, you could almost say. So we contract manufacturing all the different manufacturing steps in different parts in the world, literally. And then we built our own modules. And that's if you really grow, ultimately you do need to own that chain. That's literally a printing chain almost of printing these membranes.
Okay, and with as a percentage, the three, I just wonder what percent each of the three solutions represents for you, but on the water, resins, and BIOCLENS. Is it a third across the board, or is there one that you imagine is going to be a bigger revenue source for you guys? And if so, how do you prioritize what you focus on?
So I would say right now we prioritize by splitting the business. So that's a sort of a fairly passive way of prioritizing, you could say. But we run the membranes really as a separate business. So in that sense, it just has to find its own speed.
Yeah.
In terms of potential for very fast scale up, it could be that in the next, say, 5 years, membrane beats all the rest. But that's less the total market size as it is about the potential to have a very quick scale up once you pass those first sort of barriers of showing it to the market and getting accepted. Because imagine one of the big brands, and I'm not only talking about Veolia, right, but also say one of the big chemical brands, say DuPont or something, would say, hey, we really like that. We want to add that to our product portfolio. You can imagine a very quick scale up in terms of revenues there that is hard to beat in the other side.
Right. So in terms of ease, that would be a good one. Is that also reflective of the kind of margin? Would it be the highest margin route to go down?
Yeah, the margin could also be very attractive there.
Okay, interesting.
Yeah, for sure.
Interesting. Okay. Great. Okay. So I'll just leave you with the final thought, which is right. As far as your shareholders are concerned, as far as anyone looking in new, understanding that water is big business these days, what do the next sort of 12 months look like for you? Obviously, you've got capital, but what thoughts would you leave us with?
Yeah. So I think that the first thing I described, just to emphasize that again, is let me start with the main thing for us is still delivering the project we have sold. So that's always the most important thing, right? Our current customers need to be happy. It needs to be working well. And also because of the follow-up, the trading revenues, right? That's always very important. We're still a young company. So that's always our main focus. That's number one. Number two then is indeed, as I just mentioned, is entering those new sectors and regions. So we do leverage our own commercial team a lot with partners. So I just mentioned Nesser. We have Multitech in Africa for the mining sector. We have two very well-connected and strong companies in China that we work with that are going to do that. And we're having discussions with various partners in Europe and the US. So that sales acceleration that we want to achieve, it does often go via pilot. So in the US and Europe, we would be looking at potentially a pilot or a smaller plant. But we're looking at that acceleration very much as something for the upcoming year. And then for our graphene membranes, we just discussed that same story, these pilots that we really want to do. Maybe a final thing to mention, we also, and I mentioned that at the start, the resin exchange technology, the history of that technology, as you might have guessed, given that we sort of emerged from a mining company, is from mining. So it is efficient in water treatment, and it's different from other things in it that it pulls out certain pollutants and does that very effectively, therefore creating much less brine and having all kinds of other benefits. But what it also can do is then take out certain valuable metals from those waste streams. So given our strong footprint in the mining sector and given our background with some of our major investors, major shareholders, I should say, having some of those very big mining assets, we are very interested in applying this technology. And in fact, we're having those discussions to apply this technology then to not only make sure we help our customers manage their wastewater, manage their tailings, manage their evaporation ponds, but in that process also recover some of the value from those ponds or these tailings dams.
Willem, thank you very much for your time today. Appreciate that.
All right.